Hi, and welcome to this morning's early global view. It is currently 7:45 a.m. U.S. Central Time on Thursday, February 25th, 2016. And we are coming to you a bit later than usual because we wanted to see the U.S. durable goods orders, some of the last key actual data this week, in front of kind of a quieter day on Friday, even if it is the start of the G20 central banker and finance ministers meetings in Shanghai. That'll obviously be focused on global growth. But what we have is data that is still generally weak, in spite of the fact that indeed U.S. durable goods were quite a bit stronger than expected, but mostly making up for weakness last month. So we have to ask, what has all this meant to the markets? Well, of course, we can see the whipsaw yesterday in the S&P. This is still March S&P, hourly on the left, 30-minute on the right. And what you have is the market today here at about 1931, like off $1. So really not too much there. But the key out of Tuesday into yesterday was the weakening of oil from upper 33s to below 32, kept the pressure on here, then slipping further into the 31 area to 30.5 early Wednesday took this down. But as we had noted in the video Wednesday morning, even though the market traded below this 1898.5 reaction low, this goes back to last Friday, after the topping Wednesday into Thursday of last week, the bottom of that gap down around the 1892 to 90 area was going to be important. And the market did spend just a little bit of time down there yesterday, but by the second hour was cleaning back up above it. And we have to admit, with oil really only bouncing back to 32, so where it was, let's say, into the close going back to Wednesday, even we were a little bit surprised. It's not only got back above the 1895 to 1902 area that's been kind of important, but once it did, just said, gee, this is great, and headed on up to quite a bit higher on the day from a 1916 close on Wednesday out into a finish at 1930. So this also raises some questions for the broader issue of, have we finally reached the point where energy prices staying weak are not necessarily a hugely negative factor for equities, which ultimately in the long run they should not be. We shall see. Higher resistance remains up here into the 1932 to 25 area, so it didn't really push out above the resistance again yesterday. And you can see how the low on the opening, the top of the gap from back on Monday, was indeed right around 1932. If it should get through that, then the higher resistance remains more so up around 1950, 1958 to 62, and ultimately the bigger resistance is up in the 1970 to 75 area. We shall see. But for now, still seems we're in a bit of a good news is not great news, but bad news is good news kind of market. And that pretty much does it for the short-term view of the S&P 500.